Okay, guys, good afternoon to all of you. All right. Yes, indeed, it's supposed to be a morning MAO, but no choice. I have a meeting to go, so that's why we will have this today's session a little bit late. All right, guys, good afternoon to all of you. Okay. Okay, once again, guys, good afternoon to you. Hope you have your lunch, or if you are listening to me right now, you can have your lunch or listening to me. Now, today's MAO, a few things to cover, especially on crude oil. There's some information that you really would want to learn from yourself. Okay. All right. Okay. So once again, guys, good afternoon to all of you. Okay, let's just start our MAO right now. Okay, let's go. Okay, here we go. All right, today is the 29th of June, Wednesday. All right. Okay. So guys, can you hear me, right? Okay, loud and clear. Okay. All right. Once again, guys, do share with your friends today's MAO, because if they are buying crude oil or they are basically buying OXY, then today's session is going to be very impactful for them. Okay. Now, undeniable. We've been collecting OXY, and I've been telling you this. If there's any counter that you are going to be very safe with it, and you should add about 10-20% return by end of the year, this counter called OXY, Occidental Petroleum, is the company that you should have in your portfolio. Okay, because as I said, if everybody is banking on the probability of the US economy recovering, all right, so definitely the usage of oil, energy is going to be the top priority. Okay, so if let's say there is a heavy utilization of energy for the recovery of the economy, then that's the reason why you should buy OXY, because this company itself is kind of directly related with the crude oil energy market. Okay, now let's say we talk about there's a potential recession. Okay, so if there's going to be a potential recession itself, okay, I'm pretty sure that Jerome Powell and friends will definitely come in to save the day and consider to increase to cut away interest rate. There's what now this Michael Burry is saying, that there's a potential that Federal Reserve may have to eat back their words and allow interest rate to be cut. So no matter how I look at it, okay, because when you cut interest rate, the dollar denomination will come down, right? So what happened to crude oil? Yeah, it will go up again. So to me, it's a very blatant upfront strategy that I believe that, right, any pullback on OXY will be a good buy. Okay. All right. So how many of you are bullish with OXY? Are you bullish OXY? If you are, please keep the word bullish, okay, on OXY. All right. All right. OXY bullish. Okay. So that means I want to know how many of you are actually buying OXY. Now, if you don't know what's OXY, you can just do a search right now. It's a very popular stock right now, because yesterday, amid all the selling in the market, right, only OXY, or a few of them, a handful of them, especially OXY, was one of the leading light. Okay, the one that has been positive. Okay, so look out for this itself. This is going to be very useful. Okay, so I talk about OXY. So today we can see that, right, on my screen right now, you can see that consumer price index will be something that everybody's watching it very closely this time around. And of course, interesting, we have this Cathy Wood coming in and says that, yeah, we are actually in a recession, actually. Interesting. Now, for her ETF, it's down by almost 70%. Okay, almost 70%. Now, that's a long drop from the high. But the thing is that a lot of people are still buying into her counter. In fact, she just accumulated or draw in another $600 million. Wow, that's a lot of money. So why? Maybe because everybody's still thinking that whatever she says is true, because her view is technology in the time to come, not immediate. Yeah, so maybe she's right in a way. But of course, more important news that China is reopening. As we can see right now, China is opening up. That's why this morning and so we had some upside in the China stock market. But of course, I think that the recession fear is still going to creep into the entire macro picture, and I think that that's the reason why we are seeing some selling at the moment. Okay, so Warren Buffett, okay, kept buying OXY. It's my caption for today. And is it a sign of a higher inflation to come? I believe so. Okay, I strongly believe that inflation will see the peak only in August or September. I don't think that we are near the peak at the moment. In fact, there should be a higher climb in the time to come. So that is my personal view on this. Okay, so let's see. By beginning this, disclaimer apply as usual, my friends. My job is to make sure that you guys make money from the market. Okay, your job is to hopefully listen and get the benefit of it. Okay, let me just take a quick picture of myself for my marketing. Okay. All right. Now I've been telling people around me that if you want to buy a stock, right, other than buy Alibaba, buy Amazon, this Facebook, just concentrate on this OXY. I think it's a very good deal. Okay, I'll talk about this shortly. Yep. Okay, so first of all, let's go joke of the day. Now, every time I will start with the joke of the day because I want you to relax a little bit, feel the moment. Now, the thing is this: why inflation is a pest? Obviously, it's all right. It's definitely going to hit us, and that will hit our pocket. So this inflation is going to go around and give you a lot of problem. Why do I say that? Now, take a look here yourself. Now, you can see that, right? This guy called the Fund of Fed official Williams, all right, says that, right, recession is not my base case, apparently. He said that the economy is strong and financial condition has tightened. But the problem is you can see that the US manufacturing PMI new orders are coming down. Now, this is serious because why? 50 is a very important level that to tell you that the baseline. So only when you have recession, that's why your baseline will crack. And that was what happened in 2020 during the pandemic time. But you can see very fast when the Federal Reserve came in to save the day with the global central banks, they managed to push the PMI all the way above 50. And that's why you have the super rally where the Dow Jones recovered more than 15,000 points in a very short term. Okay. But the problem is this, the Dow Jones did not drop 15,000 points this round, but the PMI has already cracked below the 50 mark. And that is actually a very important data to tell you that recession is definitely on its way, okay? This is something I've been saying for the longest of time, and I think that probably now you get to hear a little bit more. I already warned you guys since January this year that recession will come in by end of the year. And I'm going to stick to my principle and say that you're right, by latest December, I'm going to write it down for all of you so that you can put it as a screenshot here. Okay. Recession to hit USA by December 2022 or latest January 2023. Okay, this is something that I can put it here so that everybody has, can see it. Now, the thing is this, but you must understand, the stock market will not wait until the official data coming in, then they react. The stock market will react earlier. The stock market will react earlier. So usually the stock market will react when? It will react about 2 to 3 months earlier. So which means that the stock market, right, it's about 3 to 4 months. Okay, let's say put it December. 3 to 4 months, that will be August, September period. That means that the stock market, okay, I'm going to write it down for you. Usually the stock market will react 3 to 4 months here, meaning bottom in August. Okay, all right, so I'm gonna put it there so that everybody can see it and of course consider what I said moments ago, okay? But of course, this is just for you to take a look whether or not it really happened. It's really depending on the market, but I'm kind of confident this is going to happen. So which means that, right, which means that we are not at the low yet. And number two, that means that, right, you have enough time now from June to August, 2 months to 3 months time to go and make some money from your daily job or whatever you're doing, passive income, get as much money as possible. And then after that, if there's going to be any form of capitulation or any sell off in the market, go and buy some stocks. Because you're going to get some stocks at a very, very ridiculous price. And that is where you go in and buy as much as possible. Because that time itself, a lot of your friends will be asking you to get out of stock market, or some trainers will tell you say that it's time to sell and blah, blah, blah. You go into the market to buy as much as possible. Leave it for a moment for about what 1 year or 2 years. I'm going to tell you this, you're going to be handsomely rewarded by the end of 2023. Got it? All right, so how many of you got what I just shared itself? If you got it, please key the word got it, okay? I want to see how many of you understand what I just said regarding about how I view the stock market versus recession, because there's a lot of more things to share with you. Okay, so the thing is this, as we continue, all right, while we are having this point here itself, you can see that this is really crazy stuff, because you can see that this is what happened. This guy, Williams, 12 months ago says that inflation is 2% only. And in fact, itself, right, he expects the inflation will not go more than 3%. But we all know that the numbers now is at 8%. Okay, and that's only, it's not even fully adjusted yet. So we're talking about 8%, and this guy is calling it. So he's in fact saying that growth will slow down, but it's going to be a recession. So all these people, they are all the so-called Fed chiefs, and yet they can actually say things without really going through their, okay, let's leave it there. So who is he? Now, this is how it looks like, okay? This is how he feels the market, and obviously his view is everywhere wrong, okay? He's a New York Fed President, John Williams, all right? This is the guy here, so, okay. So to me, it sounds like this, okay? You know, last time there's a very famous thing that happened in 1911 or 12, can't remember exact date. All right, yeah, correct. That is where the Titanic, all right. Now, Titanic was basically going down the ocean, and because it's so-called unsinkable. And then what happened? There was an iceberg. And of course, there was no sight of it by some of the sailors there until they saw it. By the time when that happened, it's all too late, right? So imagine this, it's like Federal Reserve people saying that there's no iceberg, but there's one big one right in front of them. And either they are not watching it carefully, or they know it, but they just, you know, fake ignorance. All right, to me itself, this is what I feel that's happening right now in the financial market. Because these are all the interviews done by them. It's not created for them. So why can they miss out such an important information? I also have my question mark everywhere. So anyway, just let you know as well, this is the US manufacturing business sentiment, and you can see that we are having a problem, my friends, big problem. Why? You can see that this is the cutoff mark here itself at about 54 level. And every time when this thing goes down to about -10, you can see that you accompany with this recession. You can see that the red color shaded area is a recession area. So it did happen again, right? When it was here, and there was recession, right? So the question is now we are here, my friends. We are now at here, -8.4. All right, we are -8.4 right now, definitely for sure. And in fact, at Richmond level, it's -19. That's so scary, right? So the overall is -8.4, which means that, right, we are in recession, confirmed chop already, in my opinion, okay? Of course, it will take some time for the Federal Reserve to come up with this, oh, okay, we are in a technical recession, but by the time when that happened, it's all right, the market were rated long time ago, okay? So this is numbers that we cannot lie, and obviously you don't see in the mainstream media, because the mainstream media will not say anything until the official data is out. But again, we can be pro-reactive. So rather than we wait for things to happen, we can prepare ourselves. And that's the reason why our traders are all preparing for this, okay? All right. So of course, you can see on my Facebook itself, right? Where I told you, right? Bit by bit, things will happen in Singapore, and finally it's coming here. Now, DBS raises rate on all its home loans, okay? Because interest rate is going up, right? So definitely our local bank, DBS, have to increase all the home loans. And they just scraped the 5 years fixed rate for HDB package. Oh gosh, okay. So of course, we know that UOB and OCBC also raised their rate on their home loan package last week. So it's just that it's going to happen. It's going to be a very simple cycle. It's going to go round and round and round, and you're going to hit and hit and hit. And of course, if let's say you have business, but you don't want people to run away, you do something. Now, this is where I love this Sushi Express, but we also know that, hey, wait a minute, where's the third slice? Now, last time it's all right, when you ordered this, you will have, it's $150, all right, and you have 3 slices. This time around, it's all right, it's $2 and 2 slices. So 1 slice is $1 right now. Wow, a salmon, 1 slice is $1. Okay, so what is happening? All these are the problem with inflation. So there's 2 ways to look at it. One, like I said, you can consider to just eat lesser, don't go for this. But to me, it's all right. Life is about eating and drinking and enjoy your friends and stuff like that. So if you think that you have difficulty to pay for all this, why don't you just consider to increase your what do you call, your income? All right, of course, the one way to do this is either you invest in stock, but if the stock is coming down itself, then invest in something else. Like maybe you can go into CFD trading to potentially short the market. But you don't like short itself, then go long on crude oil, long on OXY. At least you do something to make yourself to get the money. Okay, rather than you tighten your wallet and tighten your belt, right? Why don't you just make more money from the market? That's how I see it. Okay, but again, this is an individual choice. I leave it to you to decide. Okay. Now, the thing is this, recently I draw this chart for everybody view, okay? And I said that most likely the Dow Jones will have to go up to 31,411 because that is the 85% mark. Now, why is that so? Because the market, we're all waiting, this is the level we're waiting for at the 29,563. But of course, the market just missed it by 200 points and recovered all the way. So of course, undeniable, we were shorting the market and it recovered. So okay, I mean, we have some profit evaporated. But still, because we are technical guys, we expect things to happen. So we expect to go up to back to 31,411. Then I said that, right, we should see, I don't think we will see this channel, this upper band channel being touched. I said that somewhere around here, we should see the top already. That was what I shared on the 24th of June. Yeah, on the 24th of June, that was where I shared this. And I said that, right, the market most likely will go up and touch that level. So of course, what happened next, you can see on the chart right now. Okay. Right, and I gave an extra sharing between my own student. I said that, right, if I do the mathematics correctly, because I share with you, right, how the high was being created, right? I said that usually it's about 2,700 points on every channel rebounding. So from the lowest end to the rebounding itself, right, we can see between 31,870. If not, we can see 32,370. So I gave two figures. Okay, I gave two figures. All right, and incredibly, the market really tripped 31,870 last night. Right, it really hit that level very nicely. And of course, after that, right, the market just sell off so strongly. Yes, the market just sell off very strongly after that. Let me show you a picture right now. Okay, you can see, right, the market basically did this. The market shoot up first. It went all the way to the 31,411 mark, okay, and then it went higher. But when it came to this point here itself, right, it stopped there and pulled back. Now, the market pulled back more than 900 points, okay? Why? Because the highest point itself was about 31,800 plus. And 900, in fact, yeah, 900 plus. Then it came down all the way to 31,000. Okay, so that means that it came off almost 900 points. That's a really amazing pullback. So if you ask me, right, then the next step is that if it goes down further, it should be coming down to this point here itself, the elusive 29,563, the one that we've been aiming for. And well, I will say that, right, it may come down in a couple of days if, let's say, the market really starts to sell according to what we are seeing right now. But of course, once again, you get to be safe. Let's play safe. Make sure that if you are shorting the market, just have a trailing stop for those that are shorted. Now, for those who are not shorted, right, and you want to go for it, right, then you can just make sure that you do your risk management. Now, there's something to take note here on the side note, right? Every time when the channel hits, it does seem that the market will stage a pretty strong rebound. So which means that if the market really comes down to this point here, do expect the market to rebound somehow or other, all right? But of course, this is the 80% mark, which is the bear territory. So of course, this is different because before that itself is all the correctional side. This is not the one that, you know, the 80% bear territory thingy. So this time around, if the market bridges this 29,563, the market may push down a little bit, what we call capitulation a little bit before a rebound. That's how I see it, okay? So, and the RSI has been pretty amazingly holding on, despite it's showing it's going down, right? So that means the downward trend pressure is there. So let's say the market really dropped to 29,563 and the RSI will likely zoom down. This may actually give another telltale good sign to buy, okay? So traders, take note of this. This could be a very good chance for you to make some good money, either on the sell side or on the buy side in the later stage. All right. Okay. So if you like this sharing itself, key the word LIKE, like. Okay. Do me a favor, just key the word like. Okay. All right. Once again, guys, my job is to make you guys richer. Okay. I don't get any income from here except that you make money. And at the end of the day, after you make money, you're going to come to join me in my courses. That is something that I really appreciate. That. By the way, thanks, Kelly, for buying me this very nice mug. Good. Yeah, it keep my coffee warm. Okay. All right. Excellent. Okay. So in fact, I just finished my my course recently. You can see that. Yeah, I just had my weekend class. It's a full class and everybody was so happy with it. And they understand how important how the TA works. So I'm very happy that I'm able to do all this for you guys. And all these people that come to my courses recently, they actually have made money from the market before coming for my course. Yes, they have made money from the market before coming for my course. Some make between 3,000 to 5,000. Some individual make as much as I heard that about nearly 10,000 to even 20,000 US dollars. So people be asking when will my next class be, right? I will let you know soon because I just finished my class. It's pretty tiring for me, so I need to get a break. But okay, that's why this Saturday, Sunday, I'm gonna really give myself a good break because I'm pretty tired out. Okay, pretty burnt off. All right, okay, all right. So the thing is this now, despite what happened last night, okay, right? The fear and greed index now is not actually at the extreme fear. It's actually at the fear level, not really at the extreme fear. And in fact, itself, right, look at the movement, it is still kind of way above the support. So I feel that, right, if there's going to be any selling, right, there's going to be more room, more downside room to go. There should be a little bit more downside room to go. So take note of that because of the fear and greed index. Okay, so let's look at the economic figures right now, which is kind of interesting. Now, first of all, on Monday, we have the durable goods that is up. That's interesting. I thought it would be down. So I was wrong on that. Okay, slap in the face. And the pending home sales also went up. Oh, okay. That's why this market went up. So wrong again, hold tight. But I was correct. I said that the consumer confidence will be down and it will be below 100. Yay, I was absolutely correct. Okay, so now, this is the one today. 3 things to watch out tonight. Number 1, at 8:30 p.m. Singapore time, we have the GDP quarter-on-quarter, Q1 GDP numbers. Okay, now you must take a look here. The GDP numbers actually has been negative for the 2 straight quarters already. Okay, it's a negative position. Okay, so of course, the quarter but monthly, yeah. So it's down already, and I suspect it will be down because the forecast is still looking at a lower number. Anything lower than 1.5, it may actually touch the market a little bit deeper. Yeah. Now, the thing is this, the last time we had something like that in a negative form was back in the pandemic time, okay? Before it accelerated later on when the market, as a pandemic. Now, we all know that the stock market recovered in 2 months' time, okay? But you must understand how economic work itself, right? The stock market can sell down all the way first, then after it rebound as fast as it can, but the economic data will be slow because you go by month by month. So you can see that what happened on the behind the screen, that the market actually, the data went down all the way until the 4th month before it started to bottom out a little bit before it went up again, right? Okay, so what I'm trying to say is this. Now the last 2 months already show the negativeness, and likely it's going to continue for 3rd month. So this will actually give a very good insight that the stock market itself, right, will likely get another hit pretty soon, okay? But of course, Jerome Powell will be speaking at 9 p.m. tonight. Yay. Now, the plunge protection team, I'm pretty sure, will be on standby today again. Now, the plunge protection team will likely come in at 9 p.m., right? Now, they came in 3 times in a row. So would that be the 4th time? That's a question. Now, with all the numbers, like PMI data, the manufacturing data, every data is not doing well, right? I just cannot think, like, why should they come in? And don't forget, there's a very important thing is that on the 29th, which is now today, 29th and 30th is actually the time whereby Jerome Powell has to continue to, allow their balance sheet to be taper off. The last time they did it was 15th of June, and the market actually came off, right? So the second time now, the thing is on 15th of June, they only took out 1/3 of their initial monthly tapering. But today and tomorrow, they had to do the remaining 2/3. So let's just go back to the tape again and just take a look over here itself. I'm going to show you this something very important, yeah? Just give me a minute. Okay, here we go. All right, so we look at the Dow Jones for a quick one on the 15th of June first. Okay, here we go. Now, 15th of June itself, right, you can see on this particular day, that was 15th of June. All right, then what happened, right? After they, basically every month they take out $45 billion off their balance sheet, right? Well, that 15th of June itself, right, 15th of June, okay, they took off only, they took only 15 billion out. Okay, 15th of June, they only took out 15 billion out. And you can see the market actually gapped down and traded lower. Now, how low did the market went, right? Let me just take a look here itself. The market basically, the closing was about 30, for S&P 500 was 37.88. It went down to 36.36. So which means that the market came off quite a fair bit. Let me put in Dow Jones for me, easier for understanding, yeah? Okay, so the Dow Jones basically is right. It was like closing as 30,657, and then the low, it went down to 29,000. So which means that the market actually went down almost 1,000 points. The Dow Jones actually went down 1,000 points when the 15th of June released $15 billion off from the balance sheet. So we have a problem here, my friends. Tonight, 29th of June, okay, is the second batch for it itself. They're going to release up to $30 billion worth, to be exact, but 33 billion, around there, 33 to 35 billion. So what do you expect to see? That means that if we talk about 1,000 point drop, right, of the same magnitude, right, the market will hit 29,947. If let's say the market is going to drop by 1,000 points. But if you look at the mathematics here, if this is actually 1,000 point drop, okay, then a 30 billion logically should be a 2,000 point drop. But to have a 2,000 point drop itself, I don't think so it will happen this round. So to do a discount of it itself, right, maybe give a discount, maybe about 1,005. So another 1,005 point drop will give you about 29,447 level. And of course, that means that the 29,563 level could be triggered within these 2 days. Logically speaking, okay, I'm not saying that it will happen, but just that mathematically, this can happen. Okay, of course, again, if the plunge protection team is available, they will just make sure they'll push the market up again. But like I say, how much can you push? And of course, you can see every time when the market breaks the trend line, the upper trend line that I'm drawing for you, all right, you can see that usually there will be a very interesting, plunge protection team coming to save the day. So I'm not half surprised today. There may be some selling initially, and then the plunge protection team come in to save the day again. But after a while later, likelihood, based on what we're seeing now, the selling will likely continue later, okay? So all I'm saying is, all these are things we can forecast. As a trader itself, we just need to be careful. And of course, if things really happen, you should know what to do, okay? Now, I repeat myself one more time. If the market really comes down to 29,563, it will be a good time to buy back some of your short position, okay? Clear on this? If everybody is clear, can you keep it clear? C-L-E-A-R. That means that you actually understand that what to look out for, what your positioning like, and if the market reacts in certain ways, all right, you will do it, okay? Now, of course, another thing to watch out for will be Bitcoin. Now, if let's say there's anything else, right, Bitcoin to watch out for, there might be some selling coming soon on Bitcoin, because more and more exchange is having a bit of hit right now. And I strongly believe that Bitcoin will still go down below 19,000, yeah? Okay, that is my personal view on this, okay? So take note of these numbers now, get a screenshot of this, and see whether, all my little sharing itself will come out true. But from the angle of everything, with the big movement downwards, everything looks pretty good, yeah? Look pretty good, okay? Looks pretty good. And of course, the crazy part of this pinpoint accuracy is there. Because what I did was I connected the dots here to here, right? You can see the high was perfectly there. My goodness, pinpoint accuracy. So that means that, right, the likelihood of this coming in itself, right, it's going to be very, very high, in my opinion itself. So traders, please be on standby the next 2 days. And if you can maximize this, go ahead, yeah? Make as much money as possible, okay? I really want you guys to make as much money as possible so that you guys can probably join me together. We can go for another round of donation drive to help back the society, okay? All right, that's how I see it. Okay, let's continue. Okay, so you can see that it's a very interesting thing. The last time we saw this was the market opens and straight away, slowly, gradually go. All right, remember that was what happened 2 days ago. But today is the other way around. The market opens, went out a little bit first, and gradually go all the way down. So don't you find that the whole thing itself is like very, very orchestrated? It's no longer like value investment, buying for the future or buying something for long term. It's just like today they want to sell, they just sell all the way. Today they want to buy, they just buy all the way. There's no normality here. Everything is so mechanical. It's just like pure algorithm that's trading in the market. Kind of crazy and good at the same time, because why? It makes life easier as a trader. So what happened before we go to the correspondence side? We can see that now the US one-year inflation expectation is at 8.0. It's the highest since 1987, at a very, very high level. And of course, the current now, the thing is this, the present situation, because expectation and consumer sentiment now is definitely showing that a bit of problem, okay? Expectation is going to go down lower, and the market is getting fearful, yeah. And of course, we have some of the technology companies are going down despite a lot of stuff going on. And very important is that the Richmond Federal Index I just showed to you, it fell to 19. It's the lowest level since May 2020. So this is actually very, very, very scary. Brian, market sold down to let PPT the buyer later tonight. Possible. But if let's say I'm the PPT, I'll rather let the market goes down all the way deep enough rather than you go in and in between to block it. So it makes more sense if tonight, if I say can write the script by Brian, I will think that the market will be better just let go, let the market drive it down to the low end. When the market hit 29,563, the whole will say, oh, they're a bad territory, and then they come into March and save the day. I think that will make more sense, rather than they come in between and try to hold. But of course, again, if their job is to hold the market relentlessly, then of course they may hold it up and just don't let the market go near to 29,563. So but whatever it is, 9 p.m. tonight, very important, stay on the market, watch the market. 9 p.m. Jerome Powell will be speaking, and expect the plunge protection team to be there, okay? All right. So of course, Jim Cramer also came in and say about certain thing, and he's quite bearish today, okay? Now he talked about Disney. Now this counter, remember Disney. All right, 135 itself, we're calling for sell, and it came down almost like 40%, okay? 40%. So for people who do value investment, right, they got hit very badly. Now, why is Jim Cramer looking at Disney now? Because Shanghai is reopening up, right? And Disney, what they call Disney Shanghai, the so-called the taking will be back into the books. That's why this Jim Cramer's think that this is a good time to buy. Now, I cannot disagree on this, because if Shanghai Disney reopen, it's good. But there's something on the point is that, do you notice that in Singapore, our COVID cases increasing, right? Singapore is one of the countries that basically have a very high vaccination rate, and we have our booster shot number 3 and number 4. And yet yesterday, the number came in 11,000 people suffering from COVID. Of course, it's not a very damaging one, because most of us just had a light flu or some symptom, but unfortunately, a toddler passed on. But you know, this is a very sad case, but still, overall itself is still okay. But China is not having the vaccines that from the Western side, and they are trying to make their best to do the zero COVID policy. So I just feel that, right, the reopening of China or Shanghai, this thing itself, right, it's not going to work, in my opinion. Yeah. So you can see right now, right, the current CPI, the yellow one, is increasing steadily across the months, very steadily increasing. But the core CPI is actually decreasing a little bit. Okay, so obviously core CPI is excluding energy. But if energy prices going up itself, right, we have a problem. Okay, so watch out for crude. It's going to be very critical. And of course, you can see now, right, in terms of expectation itself, consumers are losing confidence. That is very clear. And of course, this year is the midterm election year, midterm presidential election. So again, if this sentiment is not doing well, right, I think Jerome Powell have Joe Biden have a big problem to get himself re-elected. So two ways out. One, he don't care, don't bother anymore, and let it be. Two, he will try all his best to curb inflation. And I'm so sorry, there's only one way to do it. Then the only way is to high interest rate. There's no other thing else. First of all, pull back the money from the money source. I mean, no more free money. Second, high interest rate. That is the only two things that can be done. Because if not itself, right, this inflation will definitely go all the way. And if it goes down 8%, I cannot imagine if it go to 9%. Oh my goodness, then that will be really calamity for a lot of us in the way. Okay, all right, so watch out for this. So the Dow Jones fell by 500 points as the bear market bounces, loses steam. So first of all, you must understand the Dow Jones was up by 446 points in the morning yesterday. Yes, up by 446 points in the morning. Then after that, right, it reversed to down 491 points. So 491 plus 446, you have a five. It's basically itself is about 900 to 1,000 point reversal from the high to the low. Oh my God, nearly, nearly. Okay. So it's 150 point reversal. And because the consumer confidence fell to 98.7 from 103, imagine it was 103.2 and it just jumped down all the way to 98.7. This is really scary, okay? And of course, the numbers are all there already, right? So now we are in an inflection point according to some people because it's still ongoing now, although activity is still there, but everybody's trying to avoid the word recession. But I just cannot see how can we miss this thing. So the last bounce, the market had went up by 8% from the low, and it was done across the last 4 days. So mathematically speaking, if the market can bounce up 8%, right, if you flip back downwards as well, right, it should be down by at least 16%. So that's one, be very careful on this, yeah? Okay, so now, of course, let's go to some global news right now to see what are the things that I offer for you today. Okay, first of all, as I mentioned to you earlier as well, right, we have 11,504 new COVID cases in Singapore in a single day, and that is double the infection a day ago. Okay, so we can look at this thing right now. 11,000, all right, it has doubled the 5,300, okay? Now, we already have Ong Yi Kang saying that, right, the numbers will go up soon, and kind of spot on, right, isn't it? Or the market is there, all right, and the ratio is 1.23, that's a very high number, okay? 1.23 is a high number. And you can see that the numbers is moving up at a very fast rate, okay? This is the rate right now. So all I can say is this, right? As more and more people are actually, taking off their masks and doing all those stuff and enjoying themselves, right? The numbers is just going to go up and up and up. So if the numbers are going to go up, it's Singapore, I just cannot deny that. How about the rest of the whole world? It's just a matter of time. So for China to cut their quarantine time for international travelers, right, all this is up because every country knows that the continuation of doing this will kill the economy. So they really have to reopen. But when you reopen itself, right, if Singapore is a good case study, then the next thing will happen is the same thing. There will be a reinfection again, and again, this thing of the shutdown. So if you look at it again, it takes about 1 or 2 months time to happen, then yes, the whole thing will come in. So likely by this July to August period to later September, I believe that is where the real deal will come in. So this is just the beginning. It's not even near the end yet. This is something that we must understand. Only when everybody, good enough people got hit enough, then maybe we can recover together. So that's why I felt that, right, August, September will be a very good time to be bullish in the market while the whole world is probably very bearish. Got it? All right, so I'm gonna write it down one more time again. Right, be very bullish during August to September period when the whole world is probably bearish. Okay, this is going to be a statement for this year itself. If you actually understand this, then you should know what will happen from now to then and what should you do from then onwards. Okay, this is my personal statement. I'll leave it there for you to take notice. Okay, so that's why our Warren Buffett has been buying and buying and buying. Warren Buffett keep buying more Occidental. Now, the last time I remember this, when he keep on buying a certain startup, you remember, it's Apple. When he bought Apple, remember, when he bought Apple the first time itself, right, he don't buy technology company, as you know, okay? Then after that, when he bought Apple the first time was $110. Remember that? Then after that, right, he bought even more Apples at $140. Remember that? Then after that, $160, he buy even more Apples. Now, you know that Warren Buffett, when he keep on adding a position itself, right, it's because he's so confident. And in fact, itself, right, at the moment now, he has bought so much that now he is nearly about, if I'm not wrong, about 16% about the holding. Yes, 16% itself. And you should know that for this Occidental Petroleum, right, the movement is equivalent. Okay, it's equivalent to the crude oil price itself, right? So of course, again, if Warren Buffett is so bullish on this Occidental Petroleum, then why aren't we doing that? And it makes sense. It's not like he's he's not like he's an old man who doesn't know what's going on. because it makes a lot of sense that he knows that the crude oil price will go up because the seasonal pattern shows that in August, September, and October, it's a usual bullish run. Okay, let me just bring to you live right now. Take a look here, guys. I want to show this to you because it's so incredible that this is all free information in the market, but people just don't really want to look at it. Okay, let's take a look here itself. Okay, I give you live sharing right now. Now this is the example, the what they call the crude oil seasonal pattern, as you can see over here. Okay, let's take a look. Now you can see that the seasonal pattern shows that crude oil prices, okay, by the what they call July, there will be a peak. Okay, there will be in June there will be a peak and it will come down and then it will base out somewhere in mid-June, like what's happening right now. And after in July month it will shoot up. That means that in the mid of July there will be an uptick run on the crude oil price. Then after that there might be some pullback again. But after that, in August, September, October, my goodness, this is the usual seasonal chart of crude oil. My God. So if this is going to be thing, and a lot of houses are saying something as well, right? It is something scary. And later on, when I go to the alternate market news, right, I will tell you something else. That what happened between the phone call between Macron and the MBZ, all right, whereby he is the Saudi prince, and they'll tell you something. It's really quite scary. Okay, I'll talk about this shortly, all right? But still, guys, this is live, and you can consider looking at it. That's why, to me, crude oil and Occidental Petroleum, I'm fully optimistic. I have said once again, even if I'm wrong, I don't think I'll be too far wrong. That means that if there's going to be any capitulation in the market itself, right? Yeah, it may bring back the stock down a little bit, but it will not be down for too long, okay? I don't think so. Okay, that's Warren Buffett. Now, Cathy Wood already comes in. Cathy Wood says that the US market is already in recession. Interesting, okay? And the best part of this is that, right? Cathy Wood tried to explain her bear market strategy and slash her portfolio to just 34 count holdings, all right? Now, you must understand, at one stage itself, she had 58 of them, and now it's at 34. So of course, she still have her Zoom, her Tesla, her Roku are still the firm highest conviction. But of course, they are down by 71, 41, and 81%. All the ones, yeah. Okay, from their peak. Gosh, okay. So if these are her best peak itself, right? I don't mind buying Roku at 91% minus on the all-time high, okay? But not now. Okay, this is how I see it. Okay, that is all the news I have for you. Okay, so now we're going to go into the alternate market news, and this is going to get a little bit scary. So grab your seat, stand by for this, okay? Now look at it. This is the Federal Reserve, okay? And and you can see that, right? The behind the Federal Reserve is actually the crude oil rig. All right, obviously, this is like the gloomy picture of it. Like sometimes you see in those Chinese movies and drama, say that, right? 你印堂发黑, meaning that you have forehead is dark, cloudy, right? Things can get bad. I felt the same thing also at the same time. Now, why do I say that? There's something that you don't know, right? Let me share this with you. Okay. First of all, U.S. crude inventories in the strategic petroleum reserve has fell to 6.9 million barrels in the week 24. So which means that right now, right, the U.S. strategic petroleum reserve has dropped by 6.9 million barrels, and their so-called stockpile has fell to 497.9 million barrels, which is the lowest since 1986. So Joe Biden has been doing this, releasing about 1 million to 1.3 million barrels of oil into the market to try to curb inflation. And apparently, we have 8% on the CPI data. We have now crude oil still trading about 110. And the scary part is this. Okay? Now the US reserve is at the lowest level since 1986. So think about this. If there's going to be a high intensive demand for energy in the next 3 months, plus if US Federal Reserve is going to hit interest rate so that it can start to stimulate the economy after the inflation comes down. If the economy has to recover strongly itself, right, then the energy in usage will be higher. So what will happen? The energy price will just keep on going higher. So without a doubt itself, right, there's a very good chance energy price will not stay below 110 too long, okay? In fact, itself, I have a number for you later on, okay? So what happened? Macron warns Biden during the G7 meeting. What happened was Macron contact Biden and tell what he talked to the Saudi prince, okay? So French president, okay, Macron shocked his US counterpart Joe Biden along with the oil market in a leaked conversation. Oh my goodness. The UAE is producing oil at the maximum capacity, and the maximum capacity that the Saudi Arabia could produce, and it's the most, is about another 150,000 barrels. That's not enough for the world usage, okay? Because they say that right now, the top two OPEC oil producers can barely increase oil production, can barely, okay? That's a word, barely. So apparently, Macron said, I had a call with MBZ, all right? Obviously, that's the Saudi prince, okay? And he's saying this, I am at maximum. My goodness, that means he's telling you, okay, I'm not gonna roll out more. I really don't have. So imagine now that the thing is this, you know, I can do the most about 150,000. That's it. After that, no more. And there will be no increment for the next 6 months. Oh gosh. Hey, wait a minute. How come the crude oil price didn't shoot up? Obviously, right? The crude oil price actually went up initially on the news. Then after that, right, it got pressed down. In fact, now it's being pressed down to below 110 right now. But I say again, you can press all you want, but demand and supply rule are there. So if you're telling me the economy will recover or energy prices will go up in seasonal pattern, then I'm so sorry. It makes lots of sense that this Warren Buffett is actually correct. So now everybody take a look at this, my little forecast right now. Right, I told you, right, at 104 will be a very good price to buy crude oil, and it really happened. Beautiful. So my view is this. Now it's about 110 to 111. I believe that we are going to see $130 by August 2022. Now it could be mid-August, late August, it doesn't matter. But I believe that crude oil is going to go to $130. Okay, which means that if you actually do it right now, you have an upside potential to make about $20 from the market. But do note, it will not be like a straight pathway because Biden will do all their best to push it down, but it just as steadily, slowly, it will be going there. All right. So how many of you believe that the crude oil will be going to $130 by August, okay, this year? If you think that crude oil is going to go, all right, it's going to go up to $130, right? If you think so, also text 130 right now. That means that for people who text 130 right now, you also believe that crude oil will go to 130 by maybe mid or late August, okay? Now, of course, I cannot guarantee you that you'll go there, but based on all I'm seeing now, the whole geographical thingy, everything, it does make sense to me. And now with OPEC, so-called this MBZ saying that it's all right, it makes sense. Of course, if I know that crude oil is going to go up higher, why should I produce more oil? That means that every barrel of oil, I give it to the market itself, right? If it's $100 right now, I make $100. If it's 130, I make another $30. If I'm going to have it $150, that's $50 more. So why would I want to listen to some people and produce more oil to curb inflation? I will keep my supply intact, keep quiet, and let the price go steadily to 150, 160, and then maybe I'll come in to save the day. Then like that itself, right, will make more sense, correct? And I get money at the same time. So sometimes in life, right, it's not too difficult to see what's happening right now. But, you know, again, everybody got their own view, right? So that's why some of the houses are looking at $150, $160. Now, I'm not going to go near there. I'm very happy with $130, okay? Because I also drive. I also don't want the oil price is too expensive, yeah? So because of that, right, I'm not an analyst, I'm not a licensed analyst guy, but I believe that if that's the case itself, Occidental Petroleum should be able to grow all the way to $80. Now we are at $61 as of closing of yesterday. To go up to $80, that means that the market up by another $20 on another 30% gain, okay? I believe that there will be a 30% gain in the next 2-3 months, okay? So if you share the same thoughts as me, then of course it is. Now, would there be a peace with Russia? That's a good thing, Lionel. Well, of course, if there's a peace with Russia, yes, indeed, then the oil price may drop. But I cannot see how this will happen because You can see that Zelensky itself is not really comfortable with doing that. Russia is trying to do it, but obviously US is not backing it, so it's going to be difficult. Unless that because of the sake of the whole economy, then maybe they come to a conclusion, then yes. But I just feel that it's going to be difficult because if not, right, all the money spent to, all the billions of dollars spent to, go against Russia is going to be wasted. And of course, then after that, Biden had to again answer to his own people. All these things will repeat again. So I don't think so in the near term. Maybe later part, yes. In the later part, maybe Biden will buckle in and just okay lah, for the whole world's sake, let's go down, but not now. I don't think so. Yeah, Lionel, this is my personal view. Yeah. So that's the reason why I'm saying to you, like, this ARKK is all right. ARKK, you see, went all the way up to the highest point and then came all the way down to the lowest point, and we are now back to the low end of this. Okay, now why out of nowhere I bring out ARKK, right? Because there's a reason for that. The reason is because look at it. Cathy Wood flagship funds have taken in another $600 million since mid-June. Oh my God. Investors are just coming in. They just really, really want to come in. So even though the strategy that she's performing now is really at the worst drawdown, and the thing is the funds keep on coming. In fact, it's 8 consecutive days. Every day money comes in. Oh my God. 639 million to be precise. Geez, okay. I mean, wow. I mean, your counter is down by 70%, and you're having people still trusting you to come in more money. This is a very big question mark, right? So of course, in trading itself, right, when I see this itself, all I can say is that we haven't hit anywhere yet. We are probably between anxiety to denial, which is why you are seeing now that my investment are great companies. They'll come back, and this is what exactly our dear Cathy Wood is feeling right now. Only when everybody panic and is selling, that is where you have a panic mode. And I think that, right, when basically and everybody get up, that is where the capitulation period will be. And I repeat again, the capitulation period should happen in August, if not September. Okay, so if that happened, that will be a very good time to buy into the market, because after that itself, right, it will be a good time and you can just enjoy and slowly enjoy this. That's why I believe that, right, we are now entering contraction period for economy. We need to go through this capitulation period, then we can go into expansion. To call for expansion right now is way too early. I know that someone called for expansion. I think it's ridiculous. The numbers are not even there. Just that because the inflation number dipped a little bit, because the crude oil price come down a little bit, you call it as an expansion. I think it's ridiculous. But again, of course, I'm not here to judge, but I just find sometimes some people, the way they think is something incredible. Okay. Oops, sorry, there's some PowerPoint issue. Hold on a minute. Okay, so you can see now, right, the consumer price index for urban consumer now is all at the highest level. And obviously, it's all right. Think about this, okay? Think about this. When it was here at 40, there was recession. All right, and after that, when it hit 80, there was recession. When it hit 120, recession. Hit 200, there's recession. Hit 220, recession. After it went even higher, 280. Now we are even higher at 292. What do you expect to happen, right? Recession. Recession is definitely coming home to roost, okay? This is something that pretty clear. You don't need to be an expert to know this. And of course, now we have this inventory to sales ratio at other general merchandise retailer. What does it mean? Okay, simply put, now, during the pandemic time, a lot of people they don't have the product to sell, right? So everybody go limps to and borrow money and buy a lot of products to keep in storage. But the problem is after they keep in storage now, they couldn't sell the thing. So what happened now? The inventory to sales is at a very high level. So what will happen is that when this happened, they will start to sell down prices or sell down things cheaper than it is, so that when that happens, it's all right, inflation will start to come off, because now the inflation because prices being the thing that people want, people paying for higher prices. But when the inventories is so high enough, what will happen next? People start to dump. When they start to dump, that is where inflation will technically come down. But when that happens itself, revenue will drop. So now you understand this. If once they start to dump things in the market, right, prices will come down by itself. But that's how the interest rate, when you high interest rate, is to basically hold back people's spending power. So when that happens, right, when inflation goes in and again reduce, right, revenue will drop by itself. And when revenue drop by itself, the end earnings will drop. And of course, that will lead to share prices coming down. Okay, got idea? Then after that, when the price had to really come down because all the inventories are dumped to the market, right? Then when the demand goes down, supply overwhelm, that is where the market will likely see a bottom up. So you can see right now the Dallas finished manufacturing outlook activity is now at the low end and it's at 17.7. In fact, this is the low end since May 2020. And of course, now we have a problem, guys. This is something very scary. Watch this, yeah? Okay, this is the credit spread versus the yield, okay? Now, what is credit spread to begin with? Let me just share this with you. Now, credit spreads is the difference between a yield between the bonds and the similar maturity, but a different credit quality. All right, so in short itself is the spread between the two different credit, the different yields, okay? Now, let me share something very interesting with you, okay? So you can see that, right, usually if the credit, credit is actually going upwards, the yield will come down, right? Can you see that? So if the credit spread goes down, then the yield go up, right? Okay, so you got an idea now? But now we have a problem. We have the credit, okay, going up and the yield going up at the same time. Now, this is something that's not seen at all. So what does it mean? That means that a lot of people are now going, dumping away all the bonds, and that's why the yield is going up. And because of that itself, right, we have two of them going up, right? That means there's a lot of fear ongoing in the market. Now, some people actually say that this is maybe a good time to buy. I don't think so. We need to go more. Because you can see right now, right, this is the continue to show you the high yield, as you can see right here, when the when the stock market goes down, you can see that this is where the yield goes up. So now you can see that this is the credit yields are going upwards, right? That's where the stock market is coming down. So if you look at it from the long term, all right, you can see that overall it's all right. Usually the average is here, all right? So that means that the credit yield have to go much higher than this. If that's happened, the stock market will have to come down lower, right? Don't you agree? So with this charting here, it just tells me that you have to be careful because there should be one more bigger wave on the way. One more. There should be one more coming in, all right? So again, watch out for all this. Now, this is the copper and gold chart versus the yield. Now, same thing again, you can see the copper and gold chart actually is usually called the economy chart itself. That means that if the economy is doing well, they will actually go upwards, all right? But the economy is not doing well, it comes downwards, so you can see what happened. Now we have a problem again. The yield is going up, but the economy is coming down. The copper and gold indicator is coming down. So again, this tells you that the world economy is not doing well, but the yield is going up. So the market is betting that maybe the yield will come back down again soon, so that right it will come back together. But I don't think so near term. I think that there will be a bit more upside before it comes down. It's still not there yet. Okay, I don't think so. So that's the reason why economically there's a lot of problem now ongoing, and all these are not found in mainstream media because mainstream media will not tell you all this itself. They won't tell you what's copper and gold indicator. They won't tell you that why it's so important. All these are things that I can share with you in TWB family, right? So you find this type of thing is good stuff, is that right? Then give me a like button there, or give me all the love and like, press the emoticon so that I can have you guys loving it. Now, once again, this is not usual. You don't have much people covering stuff thing, okay? Everybody is not into the technical like RSI, moving averages, and MACD and stuff. Those are really not really in my, the same thing that I see. I think this is something that, is something that you really want to know, right? Versus what I just said about those indicators, okay? All right. So that's all for the alternate market news. So hopefully that you understand what I'm trying to stress. Let's go to the chart right now. I know it's already 118 right now. Okay, let's go. Okay, let's go. Okay, so first of all, we can let's look at the China stock market first to begin with. The China stock market today has it misses my technical point by just a fraction. Okay, 14,991 is my technical line that I drawn, and the market just missed by a hairline, and now it's coming off a little bit. Now, of course, we know that 1st of July is inauguration, all right, for the new Hong Kong chief. So maybe the market is trying its best to hold up, okay? But do note there's something to take note of is that I said tonight is a Jerome Powell speech, and of course we have end of the month We have all these portfolio rearrangement, as I mentioned to you. And of course, very important, 4th of July is the Independent Days of US market. And of course, Independent Day, usually the stock market will be moving a little bit higher, right? Usually there's a seasonal pattern over here, okay? So watch out for 4th of July, yeah? Independence Day. Okay, for today's market now, it's been pretty draggy today. Now, you have a new BMB today, a new BMB, all right? All right, new BMB is here. So the thing is this, if the market actually breaks below the support level, then we have some selling. So the support level, what's that? The support level will be at 30,948, okay? 30,948. Now it's at 31,034, so it's kind of 100 points away. Only if the Dow Jones break below 30,948, then we can see 29,987, which actually is very near to the number that I just told you just now, right? Remember the number? Very near. So to me is that, right, this is about 1,000 point drop here. It is possible if the market really breaks below 30,948. But of course, if the market now, the moving averages today, MA30 is on top of us, right? So the bearishness is there, but the market is trying to stay above OP. So if the market goes up, right, it may touch MLP at 31,257. But if it doesn't touch MLP and pull back and goes below 30,948, then I can tell you this, 29,987 is high. Now the selling has a bit dwelled down recently, but the selling is still available. So traders, just take note of that. The selling is still available in the market. Now I already tell you, right, what happened about my BMB, and you should be very, very impressed by this. The BMB tells you that 12,144 is a very strong resistance level, and amazing. The market really stopped at 12,144 and pull back. Oh my goodness. This is really incredible. Imagine you pay for a system and the system can tell you exactly what to look out for, and the market performed the magic of this. It's crazy, right? Okay, so anyway, now the thing is this, take note of that, everybody. I told you NASDAQ will be the big counter to get hit because the moment Federal Reserve increase interest rate further, the US technology company will get hit further, right? Okay, so now watch this. This is the resistance level of the this is the resistance level of the BMB, right? Okay, so now everybody take note of the number itself is 11,720. 11,720. Okay, now it seems that today the NASDAQ is trying its best to touch this figure, 11,720. Now I'm going to tell you this upfront. If the market touch 720 and pull back below OP, I will definitely look to sell all the way down to here, and that's about 11,300 area, okay? And if it goes down further, it will go down all the way to 10,871. So which means that if you look at it carefully, we're talking about 11,720 dropping all the way down to 10,871. That's about 900 points. Now, if the NASDAQ dropped by 900 points, gosh, the whole market will come off quite badly. And of course, we see on the KSI now, with the KSI jump and it's on sell side. So I strongly believe later on, if the market really tap this figure, 11,720, and then come down, right, traders, you should do what you're supposed to do, okay? So this is a little sharing here, and I think that we might be able to get this spot on, yeah? So this is something to take note of. 11,720 on the NASDAQ. Please pay attention to details. This particular slide, take a picture of this right now so that you can actually utilize this and make money out of it. Right, I'm going to watch 11,720 very, very closely later on. Okay, all right, continue. Now, S&P 500 is also having a new BMB. So yesterday, all the new BMB is formed. So same thing again, if the S&P 500 actually breaks below 3820, right? 3820 is a support right now, 3820. If the market breaks below 3820, the market can come down all the way to 3692. Now, the last time when it happened is how the market never go below the extension. So if this time around, if it does, then of course 3692 will be the level. But 3692 is nowhere near to the low end. So that means that the chance of this happening is pretty high. Okay, I believe that the chance of this happening is going to be pretty high unless there's some artificial strength coming in, which we don't know, yeah? Now, Hang Seng has just went below pivot 2, below pivot 2, below OP, below pivot 2 is a sell. So Hang Seng, if you sell down further, watch out for this. This is the BMB RL level, and that number is 21,581. So take note of that, 21,951. Sorry, wait, sorry, my bad. 21,581. Sorry. Yeah, sometimes when you see too many numbers, I get lost. Yeah. Okay. Now, if the market pulls back from 22,000, it may pull back all the way down to 21,581. Okay. Now, that will be the BMB RL level. And if let's say the Nasdaq really plunged by 900 points, I can tell you this safely, Hang Seng will drop all the way down to the low of 19,604 level. If this is actually coming out true, all right, this is going to be a very scary drop, because this drop itself is more than 1,000 over point, and things can get very, very scary. Okay, so once again, all this information is made available for you as long as you're online right now on MAO. All right, so seriously, this is Singapore, one of the really better charting sharing in the market. Okay, not everybody will have the guts to share all these numbers, because these numbers are not going to be healthy as a trainer. What most people prefer to buy. So for a trainer, call for sell every time, it's not going to be good. Yeah, but I only call for sell when it's necessary. Okay, now DAX is going to open later on, and I had told you DAX is not going to go up, right? 2 times the DAX went up, 2 times the market rejected, 2 times the market is going to come down further. I believe DAX is going to come down to 12,800. I already tell you that DAX most likely will come down to 12,800 previously, and I already tell people to look out for short selling on this DAX itself. So later on, if you are trading DAX, watch out for downside. I believe you can see 12,800 in the near term for DAX. Okay. Now Nikkei, as you can see, has reversed strongly yesterday. A very strong reversal. It was up quite a bit, then it reversed, and to this a DJDD. So if nothing goes wrong, the market will likely pull back all the way to somewhere around here, and that's a BMB RL level, and that number is 26,196. So if the market goes down in between 6,196, now it's at 26,768. So we're talking about 500 points from here itself. Okay. So traders, again, watch out for this. At the moment now, the boys are still buying because of the stronger dollar means weaker yen policy, but it just cannot stay too long. Yeah. Okay. Now, crude oil, I told you, right, it will march towards higher level. This is the future CFD crude oil. Now, 109.66 is the support level which the market just trigger. I believe that later on, strength will push it up again, and it may hit 111 first. Then, of course, you know, if anything can go higher as well, right, if we got grace, all right, it may go up all the way to 114. But of course, to me, it's up 111. I'll be more than happy already. Okay, some of my students are looking for a high number because of the demand supply, but I'd rather play safe. Okay, all right, for gold. Now gold, I already told you, gold in my opinion is going to go down, although there's some resistance against it as well, but I still believe gold is going to go down. So gold likely will have to break MLP at 1821 first, then it must break pivot 2. Now pivot 2 today is 1816, and it's flat number. So if the gold breaks 1816, then the downside could be all the way to 1807, the last time it hit there and rebounded, or it can go even lower to 1798. So I cannot believe that the last time it come down to here was 1807, and we should have purchased it back then. What a waste. But then again, nothing goes wrong. If the price come down again, 1807 is there. If not, it can go for 1798. Okay, again, this is already up to you. You make the final decision on there, yeah, for gold. So if gold fundamentally is against it, the blue bars and KSI rate all tells you that the gold downside is almost confirmed, yeah. So of course, if gold is coming down, silver will also be coming down. So silver will likely also be coming down, in my opinion. So silver, if it comes down, okay, it will likely come down to here, and that's the pivot 2 level at 2049 level. Okay, only if it just doesn't, you know, listen and don't do it. All right, so traders must take note of that, yeah. Okay, so of course, the silver is going to come down to $20.49. Okay, so let's look at Bitcoin. Now, Bitcoin, in my view, is Bitcoin is going to come down because definitely Bitcoin is one of the main assets to bring down. So with the KSI all red in color and blue bar is still ever there, I believe that Bitcoin going to smash below 1987 today, and it may come down all the way to the weekend to 18,000. Now, my view is this. And of course, if the Bitcoin go to 18,000, most likely the NASDAQ will come down by at least 300 to 500 points. Okay, so watch out for this. And MicroStrategy, Tesla, Riots, all these companies will likely be hit too. And of course, last one will be Ethereum. Ethereum is trying to hold fort, but I told you, right, if Bitcoin comes down, this guy can't go too far away. So first thing is that it's turning red right now. The downside here will be at 1048. But I believe that if you could go down to this 18,000, I believe that we're going to see 850 again, Ethereum. So guys, I only be looking at Ethereum to hit 180, then maybe you can take a look. Anything lower than that itself, maybe go to 750 and lower, it'll be even better, okay? All right, that will be all for today, but I'm going to share one thing on the side note itself is the VIX, okay? Now, it's the last time, it's been quite a while to share about VIX. I want to share with you first, look at this as S&P chart before you go. All right, take a look here. Now you can see that we are now at a very clear cut that the S&P 500 is now again below the 80% mark itself. So we are in the bear territory, all right? So we climbed from bear territory to above it, and now we're coming back down again. So I believe they're going to come back down. Okay, so that is the S&P 500. And we compare this with Dow Jones. We're not near at all because the Dow Jones misses the 80% mark by a bit, okay? But I believe that now there's a rejection over here at 85, then 80% is just inevitable. And of course, if we compare this to NASDAQ itself, you can see that NASDAQ is way already below the 80% mark for quite a while. And I believe that there will be a bit more downside to go, and we're going to see all the way to here, and that's 10,871 because that's a new BMB level, right? Okay. Last but not least is the VIX. Okay, the VIX itself, you can see the VIX, all right, basically has a recovery yesterday, and based on my technical aspect here itself, VIX should be able to trade higher. So I believe that VIX is going to go up. VIX is going to go up now. You're going to go all the way to this point here, and that's about 30 level. But if you look at it, it should be able to march all the way to 32 in the near term. Okay. So for a VIX trader, if you're looking to buy, then you can see this number between 30 to 32. I believe that that will be the range. All right. Okay. Thank you guys. This is Kel signing off. Bye-bye. Hope you guys can make a lot of money. Bye-bye.